Good morning, everybody. We are back after a very long Easter weekend. Shout out to Judas for the 4-day weekend for those of us in Europe. This is Morning Blast with myself, Ryan, and of course, Michael, for your very, very candid take on what's going on in markets. As usual, nothing we disclose. Yeah, I did say that right. It's trading or investment advice. Nothing we say is enforcement unless we make it very clear. The podcasts are labeled explicit for a reason. We do not keep our language to sensible levels. We are quite filthy and disgusting individuals, unfortunately. That's just the way we are. Speaking of disgusting and unsightly individuals, Michael, how are you?
Oh, I thought you were going to introduce Clive there, but never mind. I'm not too bad, Ryan. Very good morning to you. Very good morning to all our listeners. Hope everyone had an enjoyable and hopefully relaxing long weekend, although certainly the news and data flow didn't really slow down over the last 4 days or so. And we're all waiting on yet another deadline from President Trump as the new trading week gets underway.
We are indeed. And that deadline comes in later on today, which we'll come on to shortly. Got to say, though, yesterday, lovely day in the city yesterday for the final day of the long weekend. But obviously, the weekend, not only was it bad news regarding, lots of news, not necessarily all bad news, but also Arsenal losing, which was...
Do you know what? I've been in the office for a couple of hours and I've managed to avoid all mention of the football.
Oh.
And now you bring it up first thing on the podcast.
I'm still the short.
I'm becoming increasingly nervous.
Yeah,
must admit.
I said this to you in the pub with our old Millwall friend that we made in the pub. But anyway, enough about the Arsenal.
Well, it'll be very happy because it looks like Millwall are going up. So
no, quite. Well, as long as we win it, we'll see. But anyway, Clive Lambert, our dear friend Clive Lambert from Future Text. Let's see what he's got to say regarding the markets. He's kind of jinxed it out the gates here because
I saw this.
He does say quiet for now, but yeah, we'll see how long that lasts. The S&P is back above that 65.94 level that we've been watching of late. This is obviously the futures prices, so this might cheer the bulls. Dow futures shy of Fibonacci resistance at 47,141, so that's one to watch on further gains. On this side of the pond, DAX bounced off its Marabouzi support at 22,852 on Thursday, which should cheer the bulls. FTSE futures also dipped and found some buyers on Thursday. Bund futures fell. Bund futures fell. Felled. Sorry, not fell. Fell Fibonacci resistance.
Come on, Ryan. Scroll quicker. Come on.
Right, at 126.26 last week and has since sold off to 125.05, where they found some opposite trade. T-notes also fell at Fibonacci resistance last week. 111.14 is Marabouzi's support, and 110.15 is holding. Though, so some mixed messages on that side. Forex markets remain mainly mixed on this and on the sidelines for now. Gold, the yellow metal, is above 46.27, which should encourage the bulls. Silver still has a 70 handle, so we prefer the bull story there. LME copper, London copper, testing downtrend line on the daily chart at 12,425 today. Aluminium, that's how you pronounce it, regardless of what the Yanks say, is just a guy of big resistance at 3,546.50. Above here will be at levels last seen in 2022. Brent crude is iron resistance at 112.12. Above that, 119.50 is the March high on the continuation chart. WTI topped out at 119.48 back in March when all of this started. Overnight, this is printed 116.56. Above these levels, 123.68 and 130.50 are levels dating back to March 2022. Gas oil, European diesel, basically is eyeing its all-time high at 14.15 and 50 cents to 14.22 and 50 cents once more. And finally, from Clive, European carbon markets, they sold off on Thursday back to 71.25 after hitting Fibonacci resistance at 75.74 the day before. 72.88 is now the reference on gains at Marabouzi level. Obviously, for those of you wondering why we're talking like the last thing that traded was Thursday, it's because it's been a 4-day weekend for us. So there you go.
Yes, exactly. And well, thank you as always to Clive, and thank you, Ryan, as well. And even though some markets were indeed open on Friday and yesterday, I would caution two things. One is that volumes were very, very light across the board, certainly on Good Friday and yesterday as well. And the other thing is, as a result of that, you really can't extract too much by way of signal in terms of any of the price movement that we have seen since Thursday. And in many ways, I'm quite glad that markets have been quite flat, because outside of crude benchmarks, we really haven't gone anywhere particularly quickly, which is just as well, because for a fact if we had, there'd be all the usual suspects running around on Twitter going, oh, look, the S&P's moved 3%. Yes, it's because one man and his dog are trading the market. Yeah. Do not read too much into it.
No, exactly that.
But anyway, where should we start in the Middle East this morning?
Well, yeah, it is. What is it? Day 39 of in the Thunderdome.
Do you know what? I've actually slightly lost count, because now we're out of March. My previous method has stopped working. It's 31 plus 7 plus 8 plus 1, so 38. I think we're on now.
Oh well, 38.
No, 39.
Yeah, there you go.
Can't add up.
day 39 in the Thunderdome. Yeah, and obviously, as you've mentioned at the very start of the show, we've got this deadline that's been extended once already. Is it 8 p.m. Eastern time? The deadline is today.
It is, yes. So just to clarify, this is the deadline that self-imposed deadline that President Trump has announced for Iran to reopen the Strait of Hormuz. This is due to expire, as you rightly said, Ryan, at 8 o'clock this evening Eastern time, so 1 o'clock in the morning here in the UK. Of course, Trump has threatened that if the Iranians do not reopen the Strait of Hormuz in time for that deadline, then he will destroy power plants and bridges within the country. At a press conference at the White House yesterday, he was saying that he could annihilate all of the targets that they want to hit within 4 hours, but he hopes that they don't have to do it. Again, though, some caution is required, because this deadline has already been extended twice. Trump was saying yesterday that this is the final deadline, and that an extension is, well, he then said, highly unlikely, which hardly rules it out. Yeah. And we've already had some sources reporting via Axios overnight, noting that officials familiar with the matter have said that if the president sees a deal as coming together, then he will probably, in their words, hold off, but only he and he alone makes that decision. So, yes, this is a deadline. Yes, it is potentially going to be some degree of serious escalation even when we pass that deadline, but all the usual caveats must continue to apply, I think.
Yeah, no, exactly that. And I think it's very important to note, as we've mentioned a few times over the past few weeks, Trump, if there's no kind of obvious off ramp for Trump, he's not shy in just inventing his own off ramp by just coming out and just tweeting, we've actually succeeded in what I wanted to do, or they're being good people now and they're kind of coming back to the table. We've seen many times before when he'll set red lines that need to be met for X, Y, Z to happen, and we've seen it with tariffs as well. And then just before the deadline, he'll tweet from the toilet on Truth Social that, this has happened, and basically just invent his own off-ramp.
Yeah, and I think the other thing that I found quite interesting, and maybe I'm reading slightly too much into this, but is that Trump himself yesterday in the Oval Office, or wherever they were giving this press conference, and a number of media reports have increasingly been talking about how difficult it is to actually communicate with the Iranians, not because they're being intransigent, but simply because they've destroyed so much infrastructure within the country that I think Trump was effectively saying yesterday that the only way you can communicate with them is via sort of messenger boys and paper notes. So again, maybe we're doing 2 + 2 = 5 here, but you can easily see a situation where maybe there's been no progress at all, and Trump turns around and says, well, actually, we just simply can't get a word from them because there's no infrastructure to talk to them. So we'll kick the can down the road to give the messenger boy a little bit more time to get to where he needs to go. There are a whole host of possibilities with this, as you may expect. There is, of course, the potential that Trump does indeed follow through on this threat, and if that does happen, then of course there is the potential for Iranian retaliation on energy infrastructure within the Gulf, which we of course hope doesn't happen. But I think it's one of those where it does feel like we have seen this film quite a few times before now.
Yeah, no, exactly that. Yeah, and we can't ignore the fact that there was talk over the weekend as well about this 45-day ceasefire proposal that's put forward by Pakistan, Egypt and Turkey. That's being completely rejected by both sides. But if you're going to take any, if you're looking for some upside, you're looking to try and take something from it, it does show that there are a lot of people involved now in trying to get the both, well, all three sides, because obviously including Israel as well, to the table and get them talking. Just speaking of Israel, apparently Israel have, although the powers that be in Israel have approved a long list of updated targets list, basically, of energy and infrastructure
Yes.
sites. So this is ready to go. So that, like we said, all options are on the table. There is a list of places that are going to be hit if Israel and in the US do see fit. But let's kind of hope for some upside, and hope that we can get either another can kicked or just people back to the table recently.
Yes, absolutely. The other thing I would say on that is, in terms of the ceasefire headlines, the Iranians did reject this 15-point plan, and they again put forward some points of their own. It appears that the sticking point is over whether they are talking about a purely a ceasefire or a permanent end to the conflict. So again, if you're kind of trying to sketch out and game out how this could end, are the Iranians going to agree to a ceasefire that is just sort of 45 days and it expires and you go back to where we are now? Almost certainly not. Would they potentially agree to a ceasefire that has a pathway to negotiations that leads to an end to the war? Possibly. So again, I think this is, where some of the headlines and some of the reporting that we see is not necessarily disingenuous. I think that's too strong a word, but it doesn't necessarily tell the full story, and it does pay dividends to actually dig into the full articles that are doing around and read the full story and not just the headline, because otherwise you will be operating with, basically half the picture.
No, absolutely that. And just to bring it back to like what this means for trading, about what markets are looking at, what markets are doing. I think more now than ever, no surprise, because obviously it's been dragging on for a long time now. Markets are, less sensitive to headlines that we've seen. A headline that might have moved crude $10 2 weeks ago, might only move it $1 or $2 now. I think where people are just getting a bit kind of, a bit fed up and a bit, oh look, there's another can kicked, or oh yeah, well he said this before, and all of this stuff. So markets are, what's the phrase we coined the other day for it? Like just kind of like just happy to look through the headlines that they may have been reacting to with quite a lot of venom at the start of the conflict. And I think we're just going to see more of that. People want to just see results now, right? There's no point wading in on a Trump headline that could be turned out to be bollocks within about 2 hours. And likewise, there's just so much, as you said, there's so much. I would go as far as saying disingenuous headline reporting. I think that's exactly what it is. So, people are looking through the headlines more and more. Markets are looking through headlines more and more. I think there's definitely a case to be made now that people are finally waking up to the fact that it's not so much the headlines that should be moving markets, like as in the here and now. It's how we're going to operate, or how the world is going to kind of rebound from what's going on in terms of supply chain chaos, etc. After this is all sorted as well, which I think we're going to start seeing more and more stories as April goes on of these second generation, like second round effects and stuff into supply chains, and fertilizers and all that kind of stuff.
I think you're right. I think we are very much at the point where the market is somewhat desensitized to sources, stories, and the rumor and all that sort of thing, and actually at this point wants concrete action, whether that be that is what the market will react to, whether that is escalatory, which we hope not, or de-escalatory concrete action. I think that's very much what participants are now looking at. It's all well and good getting a sources story saying something along the lines of the two sides are talking, they might reach a deal. 3 weeks ago that would have been news, because we didn't know whether the two sides were talking. We didn't even know that a deal was possible. We've now had umpteen variations of that news over the following 20 odd days. It doesn't have the same impact anymore. And I think to your point, last week we obviously had, which we'll get onto in a second, the March US jobs report. It's probably a bit too early to capture any of the real sort of conflict impact. We had March inflation numbers out of the Eurozone. We get March inflation data from the United States in the back end of this week. I think you're absolutely right to say that, we are now dealing with a market that, yes, is still focused on the day-to-day goings on when it comes to the conflict, when it comes to kinetic action, commodity supply, et cetera, but also a market that now has increased sight of and also increased sensitivity to the actual impacts that all of this is having on the global economy.
Yeah, quite. Like, people get on, we need to also remember that Twitter is not the markets. And it's very hard to forget that if you're living on Twitter. Like, people on Twitter getting frothy knickers because the number of ships crossing the strait is gone from 6 to 12. Well, before this all kicked
It
off.
was about 106 before.
Yeah, it was like 206. It was like, this is kind of, if in doubt, zoom out. But no, exactly right. But also, moving on from the Middle East for a second, you mentioned Friday's NFP data. Obviously, that came in at 178,000 versus a consensus of just 60,000. Biggest gain since December 2024. But as you said, people, well, obviously, one, it was a bank holiday. Two, I think even if it was, during the week or during a regular trading session, I think people would have still been looking for it somewhat because it'll be the next data really that we start to see impacts, if we see impacts at all.
Yes, exactly. So for those unaware of why that is, the reason for that is because the non-farm payroll survey, and this applies every month, by the way, before any conspiracy people come for me, the labour market report always references conditions in the labour market in the week containing the 12th of the month. Now, if you think about that, the second week of March was far too early for any significant impact of the conflict to make itself known. I mean, even in, gasoline prices, let alone in terms of the broader US economy. So that's one reason why participants very much kind of looks through it. The second is because fundamentally the data does not really alter the policy outlook in terms of the FOMC. They are very much kind of in this wait and see mode until we've got some clarity on the geopolitical situation. And thirdly, just going back to, something we talk about quite a lot, and we also mentioned it a second ago, the headline numbers don't necessarily tell the full story in terms of that jobs report. So you're absolutely right. Headline payrolls did indeed rise by 178,000 in March. And yes, that was the biggest month-on-month jump since December of 2024. However, a huge proportion of that increase was driven by essentially an unwind of the factors that dragged the February print so much lower. And that was actually revised from minus 92 to minus 130 odd. So if you look at the sectors in terms of job gains, healthcare added 91,000 jobs in the month of March. Probably half of that was workers coming back from industrial action, from strikes. And the other half of that was just mechanically added as the population gets older. You then look at weather-sensitive sectors of the economy, things like leisure, construction, manufacturing. All of those rebounded to the tune of somewhere between 25 and 40,000, basically because it was very cold in early February. The weather was not as cold in early March. So again, mechanically, you see the economy rebound. And I think this is where looking at averages helps. So the 3 months.
So, I'm glad you said that, because I was going to say, you look at the 4-month rolling average of December through March, I think it's roughly about 50,000 per month.
Yeah, exactly that. And, the 6 month is about 15,000. So, yes, 178,000 is a decent payrolls number on its own, but it doesn't tell the full story of what's going on in the labour market. And actually, the same goes for the household survey. If you look at unemployment, unemployment fell to 4.3% from 4.4. Actually, on an unrounded basis, we came from 4.44 to 4.26. So it's an even bigger fall than the rounded figures would suggest. But that wasn't because of a surge in hiring. It was because of people leaving the labour force. Yeah. Participation fell to 61.9%, which is a new cycle low. So again, you look at the unemployment rates, you go, oh, that's great. Unemployment lower is a good thing. Well, it is if it means that the number of unemployed people is falling. It's not a good thing if it means that the number of people in the labour force is falling, because that actually implies that the labour market is relatively weak and people are just giving up on trying to find work.
Well, and this is something that's very, very important. I think, I think we'd be gobsmacked if we could find out the number of people that don't actually know what that number represents, what that, what the employment rate actually represents, because I guarantee there are a lot of people out there will just think it's a percentage of the entire population.
I'm sure, yeah.
Which there most definitely isn't. And this is something, I've gone into quite, jokes aside, why one of the reasons why I prefer ABP to NFP. I'm not going down that road again. Don't worry about that.
Thank God.
You do need to understand the method. If you're backing, if you're going to be leaning on numbers or certain kind of data releases to prop up your arguments per se, and use them to make investment decisions, you need to know how the fucking numbers are come up with in the first place. You need to understand the methodology. And so many people out there do not understand the methodology of a hell of a lot of the data that they kind of make investment decisions on.
Yeah, exactly that. And I think, particularly, and this is not just a US thing, by the way, this is, just generally how
Well,
unemployment is calculated globally.
sorry,
Sorry, I was just going to say
go
very
on, go on.
quickly, you've got to remember that, yes, if you think about fractions, go back to your arithmetic classes at school, the numerator, the top number, yes, that changes, but so does the denominator, the bottom number, the size of the labor force. So
Yeah.
there are two variables that go in to calculating that figure, and too many people forget that.
No, exactly that. Yeah, and again, just kind of zooming out a little bit and kind of looking more broadly in terms of what why methodologies matter. The prime example for this is GDP. Now, every country calculates their GDP differently.
Yeah.
And like the French, especially the French take into account like teachers, like schooling and stuff like that. And it's every the number of people that in passing, obviously this is how much fun me and Michael are when we have a pint. But a number of people you mentioned to over a pint about GDP this, GDP that, and you say, well, hang on a second, you know that they're completely formulated in different manners. And they look at you like you're talking Spanish, and obviously I can't barely speak English, so let alone. But just quickly before we move on from this,
But this is where, sorry, I'll come back to that. So this is where the trade stuff becomes really interesting, because I can't remember exactly. They're calculated differently as well. And there was a point last year where I think the US said that they ran a trade deficit with the UK, and we said we ran a trade deficit with the US. It's like, well, someone's got to be wrong here. But it's purely just the way that the statistics are collated that causes those kind of odd quirks.
Yeah, no, exactly that. And like someone's in the live chat now just saying, how does cutting rates help the labour market? Well, to be frank, I don't think it does. And just on this, before we go on, quickly do a look at the week ahead, I'm still, well, more now than ever, of the opinion that banks raising or cutting rates has little to no impact on the real economy anymore. There's so many other tools, monetary policy tools, fiscal tools, especially when we're kind of looking at supply shocks and stuff. I've mentioned this to the Alpha Pix boys on the Friday Fix 2 weeks ago. Banks, central banks are moving interest rates based on what's happening due to commodity price inflation, etc. It means nothing. It has zero impact whatsoever. And I think people, and again, I have tweeted it. I got a lot of aggro for it when I tweeted it a long time ago. But I think people are so kind of indoctrinated that central bank decisions impact, near-term interest rates. Near-term inflation and stuff like that. I don't think it moves it one jot. I think inflation, central bank moving a central bank decision, interest rate decision by 25 basis points does fuck all to the inflation rate.
Yeah, I do agree with you, but I think I was going to say, I think this has only become more prevalent effectively in the last 5 or 6 years, because the drivers of inflation have primarily been from supply shocks, not from demand changes.
I would argue since the GFC.
Yeah, potentially. Yeah, actually, I can give you
I think everyone's so indoctrinated on, central banks move interest rates, which then impact inflation. I genuinely believe that is bollock since the GFC. I think every textbooks need to be rewritten. But anyway, what else have we got this week, my dear friend?
Well, now that you've got that rant out there, Ryan, we can crack on. In terms of the week ahead then, today there is not especially much going on, to be completely honest with you, unless a whole host of services PMI figures excite you, in which case I would go and find a doctor. Regardless, the remainder of the week could be slightly more interesting. Of course, the main focus as we move through into this afternoon and also overnight for those of us here in the UK will be this deadline that President Trump has issued, and anything that happens in terms of either escalation or the can being kicked down the road, etc., etc., etc. As for the remainder of the week, though, and scheduled events, tomorrow we have a policy decision due from the Reserve Bank of New Zealand. They are set to hold the cash rate steady at 2.25%. We've also got a 10-year Treasury auction in the United States. That will be worth watching closely, because if you recall, a fortnight or so ago, we had a week of 2, 5, and 7-year auctions, and all of those tailed the when issued quite considerably. They were taken down very, very badly indeed. So the 10-year auction tomorrow and then the 30-year sale on Thursday are going to be very interesting to gauge participants' demand for securities at the long end of the curve. Also on Wednesday, we get minutes from the March Fed meeting, and we get earnings from Delta Airlines as well. And I think that's going to be potentially instructive, given how exposed Delta and all airlines are, in fact, to the changes that we've seen in oil prices, because, of course, US airlines gave up on fuel hedging quite a while ago. Into Thursday, we get the weekly jobless claim stats from the United States. We get PCE data, although that's for February, so again, pre-conflict. We also get the final read on US fourth quarter GDP. Again, that's very, very stale at this moment in time. And then into Friday, as we alluded to earlier on, we do get the March US inflation figures. Headline CPI, that's seen rising to 3.4%, up from a prior 2.4%. No prizes whatsoever for anyone guessing that that's driven entirely by energy prices. Also on Friday, we get the March Canadian jobs report and the preliminary read on consumer sentiment from the University of Michigan. This will be April data. Again, the inflation expectations component will be the key part of that survey. But of course, it kind of goes without saying at this point that the main driver of things as we move through the next 4 or 5 days will very much be geopolitical developments and the situation in the Middle East.
Exactly that, my dear friend. Well, welcome back. It's been good to chat to you again. Listeners, we hope you didn't miss us too much and we've added a bit of value to your day and put a smile on your face, more importantly. Yeah, whatever you're up to today, keep it tight, stay safe, and we'll